All right. Give it like 2 seconds here while I scroll down. But welcome everybody. My name is Spencer Riegle. I am the Chief Options Strategist here at DARMA Capital Trading. And so each week we hop on and we do a quick stream on our market outlook. We talk kind of top down in markets, right? So we talk macro events that have happened in the last week, and then we kind of dial it into more of an application focus, and then what's happening here in the now. What we pride ourselves in is understanding markets and their facts, right? And so there's obviously a lot of noise and narratives that are going on around price. What we try to do is kind of mitigate the noise and really focus on what's kind of happening here, and then how are we going to approach that from a risk-taking perspective, but most importantly also from a risk mitigation perspective. So without further ado, let's get into went through this. So yeah, if you want to reach out to me, I am on Twitter _RIEGLE. LinkedIn is full name. And then let's get into this disclosure. So all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations, right? Trading futures, equities, digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. If you are trading, make sure you trade with risk capital, right? And so what we often like to talk about is kind of our market outlook and what we're looking at on a weekly basis, but most importantly, how to look at the risk, right? And how to mitigate some of these risks of these financial products, right? And so if you are trading in the derivative space, right, whether that be futures, margin account and equities, right? Digital currencies, there's perpetual contracts, options, all the way up to exotics, over-the-counter products. There is substantial risk, right? And so while they are incredibly valuable in understanding how to use them, always want to make sure that we note that at the beginning of kind of each session that we go through. So as I kind of briefly touched on, each week what we like to do is we talk about macro events, and then we kind of get into a weekly price map update, right? And so for those that are unfamiliar, our price map is our quantitative and qualitative data. It is cross-asset, right? And so for the most part, we are involved with Bitcoin and Ethereum markets, right, that we are trading actively. And so that's what we're going to cover every week. But we do support cross-asset, right? And so the foundation of the price map is what's happening in the here and now. It also acts as an incredible risk overlay, right? So visualizing the here and now also helps get rid of some of those hope aspects in trading that we often feel as discretionary traders, and really just dial in to what's the market doing, right? After that, we're going to go into strategy and then application, right? And so to kind of kick off the week, right, let's talk about macro. So obviously, front and center today is U.S. primary elections, right? And so it's been an incredible thing to watch, right? How markets have priced in the winner of the U.S. primary election over the last few months. But as we've gotten closer to the actual election day, which is today, November 5th, we've started to notice out of both betting markets, bookies, out of just analysts, that it's going to be probably a fairly tight race. And so as of right now, I just looked, I was watching some live coverage. It's 49%, 49% with a small spread, right? And so at the end of the day, right, the best way to look at this is binary. And so while there is potentially a skew in terms of the favorite, it's hard to say who's going to show up to the polls. It's hard to say all these kind of things, right? Not only to mention that when it is a tightly contested, it also matters that when the winner will actually get released, right? And so the infamous Trump being involved has shown historically to prove that potentially tonight is not the night that we'll actually find out, right? And so why is that important to note? That means that the market has this wall of worry currently, and likely it could be in a stage of worry for a couple days, right? And so what does that mean for investors? That just means risk. And at the end of the day, when there's risk, that means potential for volatility, which is great for traders. But also it means that it could be outsized to what we've expect. It could be whipsaw. It could be a lot of just back and forth, right? And so kind of as we go through our weekly outlook, right now in this period of uncertainty, it's if you're in profit, take it, right? There's always going to be, and there's going to be ample opportunity for trade throughout the rest of this month and potentially even, I mean, most likely the rest of the year, right? Based on the decision that's made today or this week. And if it's not made, let's say worst case scenario, it takes 5 months, which if you look historically in U.S. primary elections, I believe that's been the longest determined outcome many decades ago. That would also be an incredibly probably bad scenario for markets and also present an opportunity. So what we do know is there's not going to be a lack of opportunity, but getting stuck to the thesis that something has to happen without a defined outcome currently likely is not the right method for risk mitigation over these next few hours, right? Next few days. So outside of just the U.S. primary election, right? We have an FOMC meeting here in the U.S. on Wednesday, which is going to be, has kind of taken the backseat to U.S. primary elections. Everybody's wondering who's going to take the White House come January, but nobody is really talking about the FOMC, right? And so it is a rate decision. Right now, priced in the markets around 25 bips. If it were to stall, that would be probably a shock to the market, right? And if it were to cut a little bit further, also would be a little bit of a shock to the market, right? And so the expectation is 25 bips outside of kind of what's been forecasted. That's probably quite likely, right? So those are the two blaringly large events happening in markets. I guess to talk kind of on the analysts of the U.S. primary elections, specifically in crypto, because we're going to go over an outlook in Bitcoin and then we're going to go on to an outlook in Ethereum. A Trump win would largely be positive for probably broader markets, and the reason comes from it would be a Republican dominated Congress, and then it would also be a Republican dominated presidency, right? And so usually when there's an alignment in the Congress and in the presidency, it creates an environment for things to get done. Trump has widely been supportive of crypto markets, right? And so markets have kind of priced that in a little bit, and that would potentially be a good scenario, right? However, on the other side of things, it's also looked at from the Harris administration to also be a step up from the Biden administration in terms of crypto, right? And so she's come out and she said some positive remarks towards the industry. However, if she does win, it doesn't look like she will win the Senate. And if that's the case, there will be a split in Congress and potentially not as many things will get done. And she potentially will not prioritize the industry over some of the other policy that she's looking to push forward, right? So marginally better on a Harris win, but looks to be quite positive if a Trump admin were to step in, right? So that's kind of large picture what's going on. Let's dive into the here and now and get price map up here, and let's get that up. Get that up. All right, let's go into the outlook for the week. So what you see here on the left, for those that are unfamiliar, is a weekly Ethereum price map, right? Price, the start of the week is 11.3 from what we notate, and then what you see on the right here is a book map. So let me stretch this out so that it's just a little bit more visible on YouTube. And I'll kind of dial in here, and then we'll talk about last week as well. So let's pull up Ethereum perpetual multi-book on the right. All right, perfect. So a little bit to note last week for those that tuned in. Last week we had a lot of resting paper at 2,700 in Bookmap, right? That was in the multi-book perpetual. If you were following that, we were talking about it a little bit in Discord. So if you're not in Discord, make sure that you hop on and join us in Discord. But there was 17,000 on the offer at roughly around 2,700. 2692 was that figure that we were watching. That was the weekly UP, right? And so we were notating that was going to be a very large figure for the week, right? And on a normal week, we would come up and test that. And if we couldn't break through really to the upside and came back and rejected it, where would we have gone based on our expectation? Right back down to the directional, right? Which is exactly what we did on the week. Why was that such an important figure? One, it aligned on multiple different time frames, but two, it aligned with that liquidity that was stacked in the book, right? And so there was resting liquidity in the spot markets at 27.20. There was a 500 lot there, but on the day in which we came up and tested here, that 17,000 lot that was sitting up there was 23,000 to start the morning. Couldn't push through, right? Came up here, we tested around 2696, 2694, right? It got front run, sold it right back down into this negative alert distance, right? Bid it up into the regular session. Regular session, we took it out, right? But most importantly, there was 33,000 contracts that were sitting on the offer at this particular point in time. So we didn't take it out easily, right? I ran the numbers. I believe it was around 47 million in notional sitting on the book to buy. Right, let's run through that. No, 91. I apologize. So 91 million in notional sitting on the offer to buy. We printed right through it. We tested that day. We tested basically the CRX plus on the daily, right? And then quickly we reverted trade, and since then that was the level that held, right? Let's talk about psychology there. Let's talk about Bookmap, and then let's talk about price map, right? And so how to use all of them. Price map showed us the importance of the level. Bookmap showed us the validation of the level, right? There was 33,000 contracts, 91 million in notional sitting there in the perp market. There was another 500 lot in the spot market, right? Cash market sitting there. Those both rejected. We printed through them quickly, and then we reverted trade, right? That then becomes a psychological level, right? Markets like to gravitate towards liquidity zones, right? The reason for that, if I see resting paper in here, let's say I'm a market maker, for instance, right? These are all hypothetical scenarios, just to be clear. But let's look at Bookmap today. We have 2660 as our level here in Bookmap. 2650 is our resting paper. You have around 40,000 contracts on the offer, right? Where's that in alignment with? That's in alignment with our weekly UP again, right? Interesting. However, if I know, let's say I'm short delta, right? Or apologies, let's think about this. So if somebody's looking to sell out here, then I'd be looking to buy, right? And so if I'm short the market, basically I know that I have here as my area until the lid is kind of broken off, right? And so there's a couple things in which I want to approach that. One is it's okay to be short under these weekly directional levels, right? Because the market's negative. But I know if the market's going to sweep higher, where potentially could it sweep on a president election? It could sweep all the way up here. right? And so where do I want to look at my risk? I want to flatten out right over this directional level, potentially even a little bit sooner, right? And so let's look at price map to understand how would we approach this week, right? And so this week, what's going on in a macro sense? Macro sense is we have the US election. We've sold off aggressively into the event, right? So there is a buy the rumor, sell the news, or sell the rumor, buy the news in play, right? But how does that align in terms of a weekly basis, right? Well, if we're basing here at the weekly CR minus, right? We came under here, took a shot at it last night. Down here was around 2350 was our lows, right? That was on low liquidity. How do I know that? One, I was there trading it. Two, it was in an hour in time where there's a lapse in trade, right? That lapse in trade is around 5 o'clock Chicago till around 7 o'clock Chicago now with daylight savings. But it's also pre-Asian Open, right? Moment the Asian Open started, we got a bid right back. Our retest lower, that was supported. If we hold these levels, where are we going to go, right? We're going to go and test the weekly directional. First, we got to get over the previous week's low, right? If we can't get over the previous week's low, that's a problem. Where are we going to go? We're going to test this weekly CR minus, but we need to think larger than just today when we're thinking about trade right now, right? The reason for that is if you go look at open, high, low, close of last election, the 7-day period of the elections in Ethereum markets was around 23% range, right? The day of the election was around a 5.5% range, high to low, right? So while we don't have a ton of data in terms of Ethereum was not trading in 2016 and a significant scale for us to really track, the market is developing, we can look at last election, what happened, right? High to low, we traded up 5.5%, right? So 2350 is right around where that low was last night. Let's take where our high is here, which is right around 2475. Divide it by 2350. Right in range currently with what we did last primary election, right? Where does that align? That aligns with the previous week's low. Fact of the matter is, if the market's going to base here and it stays positive over the weekly CR minus, it absolutely can test the weekly directional. Where is its first hurdle in which it's going to test? This previous week's low, right? Why? Well, if you got caught buying the lows last week, you have a free out again, right? We talked about that a little bit last week. Previous week's high was right here. If that's the case, then there's an expectation that you stall, because if you got caught buying the highs, you might want to sell for flat, right? So same thing here. If you got caught buying the lows, you might want to sell flat, right? So that's what we've seen during the regular session, but more importantly, it also aligns with the range of last election in 2020, right? So last election was 5.5%. Right now we're at 5.3% for the regular session. The vote has not come in, right? So it's been a large move on the day. It would make sense to take some profits into that level, right? So this is now a level of interest, right? So 5.3% from the recent lows on the first day, right? Also a previous week's low. So the fact of the market is there might be longs caught that need to sell. There also might be longs that traded perfectly here and are looking to take some profit, right? So this is a natural digestion. What would make sense for the next acceleration higher, right? Last year's election, we did 23% on the following 6 days after the election. So a full 7-day period, right? So 23% from those lows. If we were to replicate last year, or sorry, not last year, last election would be plus that 2350 level, right around that 2890, right? So digestion here makes sense. If we were to expand trade, it likely happens after we get a winner and a loser. And where is it going to go? Well, that could give you the test of the weekly directional. Because the weekly directional is green, right? Try to keep it simple. Over the weekly directional is positive on the week. Under the weekly directional is negative on the week, right? If it's green, that means it's a pivotal week, right? This green level changes each week. So this is the weekly directional 3 weeks ago. You'll note that the green was here. But because it's green, that means it's a pivotal week. That means the market could go up a lot or could go down a lot, which is in alignment with the macro events that are actually happening, right? Where is it going to go if it bases the weekly directional? Make a play for the previous week's mid, right? But more importantly, the previous week's CR plus. If we look in Bookmap, there's not resting orders here. The expectation is if there were, maybe we stall out. But because of the week and because of how volatile the week could go and how fast it could happen, right? The expectation would be for a trade to the UP, right? And so if that's the case, that aligns directly with Bookmap, right? And so that's going to be your 40,000 resting in the offer in the perpetual market. That's a significant amount of capital, right? Notional value that's sitting up there that would need to be bought. A natural digestion would be for the market to base over the previous week's low, right? Election comes out. Now that the wall of worry is basically out of the market, now the market can price in this new defined risk, right? And so, okay, we price over the previous week's low. If we make a base over here, where are we going to go? We're going to make a play for the weekly directional. If we can base over here, we know we're in a pivotal week. We have the potential to make a real play for this UP, right? UP is defined as the upper containment level of the critical range. DP is the lower containment level of the critical range, right? That's what we define on a weekly basis to be normal trade, right? We've seen that last week, right? Trade up to the UP, reversion down. If we struggle here with the 2660 level, 2646, right? That's all sitting here, that resting paper here in the Bookmap. Where would we go? The expectation is we do a similar trade as last week, right? If we reject the weekly UP, the next natural trade would be if the market's good, it should hold the weekly CR plus, right? But more importantly, it should probably hold the previous week's mid, right? But if it can't hold this lower metric, or sorry, this lower variance here at 2550, then the expectation is we revert trade and we trade right back down to this 2500 level, but more importantly, this weekly directional level, just like we did last week, right? Now, because of the news, because of the potential for such an explosive move on the week, if we price through that 2660 level, right? Where are we going to go? To the UT1, right? And that would be your full, basically, symmetrical move from last election recreated, right? And while it seems incredibly unlikely, right? The November 2015 2700 by 2800 call spreads are on the offer at $19, right? They're paying out 5-1. It's possible. It's not only possible, it's already happened, right? And it's happened in 2020, right? Now, because an event happened in 2020 does not mean it has to happen again. The simple notation of the potential of explosive moves here in the market today is what I'd like to talk about, right? We are not in a normal week when we're looking at the price map. We are in potentially a historic week for crypto. Reason for that is for the first time, probably in the industry's history, a U.S. Government likely defines what crypto means here in the U.S., right? That has a significant impact on the market, right? Now, inversely, let's look at our risk, right? We just talked about the upside. The upside is quite extreme, right? But the downside is also just as extreme, right? We're talking about range. We're talking about realized volatility. If the market doesn't get what it wants, right? Or let's say it's a sell the news event, then where are we going to go? And how do we define that risk, right? First and foremost, a market that's priced under the previous week's low is negative, right? While it's positive over the CR minus, right? Getting some buys in here for a potential what if trade to the CR plus, right? If we cannot base over here, then it's fair to assume we're going to come and retest this weekly CR minus, and that's when it becomes negative, right? Because if we break the CR minus and trade under this negative variance here, which we know is priced around right around in that 2385, 2370, right, area, then we know we have a potential for a trade lower, right? And where do we go? We're going to go down to that DP, which defines our normal trade for the week, right? UP down to the DP, the red level up here down to the blue level down here. If we break here, the same is absolutely possible to the downside on an extreme event for the week, right? That would be the 2147 level, right? So oftentimes we don't talk about this large expansive range on the week, but because we are talking about a historical week in crypto, historical week in markets, we do have to notate in terms of risk what is possible when we are looking at the price map, right? So on an application perspective, how to take advantage of this? Well, purely based on the fact that there's going to be a larger amount of realized volatility, potentially on the week, right? Trading smaller makes a lot more sense, right? The same lot size that you had on last week, right? With the expectation that you were going to make X could potentially be 2X that this week, right? On the profit. Now, inversely, on the risk side, it's the exact same, right? And so price absolutely matters this week, and size matters this week, right? So whether whoever wins the election, we do know that potentially there is going to be a large movement in markets. We also know that the first move could potentially be a fake out, right? I notate that because if you scale all the way back to 2016 Trump election where he won in the US, the S&P 500 was limit down that night and slowly found its way all the way back to positive by the open. So regardless, at the end of the day, what we do know is there's going to be a lot of opportunity, risk less to make more this week is going to be your friend, and sizing down is also going to be your friend. So that's the outlook for the week in Ethereum. Kind of these larger areas in which we're defining is 2812, 2147. Note that downside markets can get even further extreme in crypto. You might see a sub 2000 is quite possible, just as a notation, right? And so the next outlook that we want to go over, right, is Bitcoin. So let's go over here. Bitcoin has been more of the Trump trade, right? And so when I say Trump trade, what do I mean? I mean that Trump has largely been in the lead of the betting polls in a lot of the pre-election votes, all of these kind of metrics that are coming out. And so that's priced up assets in which his policy would benefit, right? So we've seen that in Bitcoin, we've seen that in the DJT stock, we've seen that in US equities, we've seen that in different areas of the market outside of just crypto and traditional finance as well. And so Bitcoin is a part of that trade and has been. And so we've seen a firming on the bid in this market. And so last night we saw a large rotation. So Bitcoin markets are a little bit different than Ethereum markets this week, right? And so let's take a look, right? So last week we had an outsized move to the upside. We traded, it was less than a couple of percentage points away from an all-time high. Everybody was getting excited, right? And then we just saw a large amount of selling volume, right? Sellers came in, they pushed the market down, and we never returned. We never returned, and not only did we never return, we saw significant selling Saturday night to start the week, our week, right? That was aggressive and unrelenting to anybody that was caught buying those all-time highs, right? So those all-time high almost prints were close around 73,500-ish area, right? 73,600, hundreds of points away from an all-time high print. If you were caught long, absolutely Saturday night was a frustrating night for you. But where is the outlook for this week, right? So we open up our Saturday nights here in Chicago as the weekly start. So under the weekly directional is seen to be negative, right? So we opened up basically just over a shift under the weekly directional, opened up for some potential selling into that liquidation move that we saw Saturday night. The CR minus, right, and not a breach of the CR minus opens the door for a potential retest of 70,000, right? And so the market tried to make a play for that. Positive over the weekly directional, negative under the weekly directional. Couldn't do it, right? And so where are we going to go? We're going to go test this CR minus, which we did last night and yesterday. A hold of the previous week's low is in alignment with this negative variance here on the weekly CR minus. That's positive, right? And so this was in that dead trade, largely led by aggressive selling in Ethereum, right? But Bitcoin saw some sellers too. Market held up a little bit firmer. The green level here under the market is positive on the week, right? And so a hold of the previous week's low is also positive. The moment we trade back over the 67.2285, also positive. So the market has a potential to make a play, right? Where is it going to make a play? Well, CR minus to CR plus is a natural rotation. We define it as a CR rotational trade. It's imperfect by the way that it breached lower, but because it was in a dead hour of trade, it's in a hypervolatile extreme week, it's okay to see imperfect numbers, right? And so basically a breach under here, a base over here should give you the signal that, hey, if trade's not going to trade any lower than that, where are we going to go? We're going to test this weekly CR plus, right? Where is that weekly CR plus in alignment with? The previous week's mid. So where are some hurdles that we are watching over the last 24 hours through trade? First, we got to get over this positive variance here at 67,500 level. We quickly did that into Asian hours last night. A retest here, and then a just continuation of the trade, right? The weekly directional is very important to note, right? I stepped onto the desk around 3 a.m. Chicago this morning, and so we were trading right around here. It's normal to see a first rejection of this level, right? We just traded what we call a half APMD, which is an average price map distance. A retest a little bit lower, digestion a little bit lower is normal, right? where would the concern be on potentially a retest of the CR minus? If this white bar were to get under the yellow dash line here, that would be negative, potentially a signal to lighten up on some buys that you have here or in here, right? If we can't do that, then the market's holding up. Where's it going to go? It's going to take a test here at the weekly directional. If it blows through that weekly directional, where's it going to go next? Previous week's close. These are two levels that are incredibly important this week, right? 69,000 directional, basically a 69,450 for your previous week's close. If we base over that, where are we going to go? We're going to test this weekly CR plus, right? And Bitcoin has been stronger throughout trade quite frequently. And so it would be normal to see an outsized move in Bitcoin or over what we're seeing in Ethereum, right? And so where are we going to go? Well, if we base over this previous week's mid, this is basically the decision area of the week, right? Last week's trade was a high over here, a low, low right here. So high, low, we're trading right in the middle of it, right? That would make a lot of sense because we're heading into a binary event. The market's basically waiting for an outcome, right? It pushed the extreme low. If we can get a base here, where are we going to go next? Push the extreme high and be an incredibly frustrating trade for most, right? It would be an expansion of the range up to the CRX plus. And let's do some numbers here. 73,945 minus that 66,500 low right here, right? Roughly, we're doing rough numbers here. Divided by that 66,500 low would be right around a 11% range, right? And if you look at the historical range from 2020, I believe it's close to around 13%, right? So these are normal expansions in range that we're seeing more frequently. However, with this US election, it's also a higher probability that that happens, right? So if we base over this level, where are we going to go? Going to test this weekly UP, right? This is defined by our critical range. Down here, right? So 65,453 up to 72,246 would be a normal level of trade. All right. Where do we have to go here in Bookmap? Well, first we got to get through this resting paper that's sitting here at 71,500, right? That's going to be front run in front of this weekly UP. The expectation based on price map is that we're going to price through it, right? However, if Bookmap holds up and we can't get through these sellers, it's important to note that those are the offers in the market, right? And so potentially we could stop in front of that. If we stop in front of that, where are we going to go? It'd be normal to retest this weekly CR plus, right? And then potentially make another trade higher, right? And so you could get this stop and go action. If we blow through this resting offers here in the book, where are we going to go next? 706 sitting at the offer, 72,500, which is right in alignment right here with our weekly UP, right? So in both markets, Ethereum and Bitcoin, we have resting offers here in the weekly UP. That is a very important number to note on the week. One thing that is also important to note is that this week is going to be potentially an expansion of realized vol from what we've seen over the last weeks, right? Which just means same thing that we have kind of been preaching about since the beginning of the session. There is going to be an immense amount of opportunities, right? You do not have to catch every single opportunity. Waiting for your price is what's going to be most important here, right? There is going to be potentially a large range expansion with a pullback. It's going to be a very volatile week, right? So sizing down makes a lot of sense. Playing the extremes makes a ton of sense, right? Waiting around for a print here at that 70 or that 72,500, right in alignment with your weekly UP, makes a lot of sense. To the downside, let's talk about it because we haven't talked about it yet. While Bitcoin is showing a sign of strength, right, over the weekly directional, where would it be potentially negative? Under this previous week's close, you can start to be a little bit more concerned, right? Why? Again, fundamentally, markets on the close, if they're over the close, that's positive on that time period, right? So whether this is a year, a month, a day, a week, that is positive, right? Under it, it's negative. Why is that important? There's algos that buy and sell on the close. Pure and simple as that. Also, pure and simple to that is it's an absolute fact, right? So while there are narratives that Trump could be better for the industry, it's unknown how the market is going to trade after, right? And so by simply just looking at what is the fact of the market, you can mitigate your risk, right? And so by doing that, under that previous week's close is where you can get concerned. Why? You're going to test the weekly directional. A retest of the weekly directional that fails sets you up for a retrade down to this previous week's low, but the previous week's CR minus. The R level, which is this green level that we watch and we monitor on a weekly basis, it does change, right? This was your weekly CRX minus last week. This is your weekly DP, right, which is this week. Is it the expectation of where that buying is going to be sitting in the book? Let's see if we can see any of that. Oops. Let me zoom back out here. Not a ton is showing up yet here in the Bookmap, but the expectation is we were to hold basis the weekly. If this level does not hold down here, which is a little bit under 65,000, the market is vulnerable, right? And where could it go? 62,000. If it really wants to expand, down under 59, right? Similarly, if we get a trade to the UT1, that would be a normal UP breakout that we talked about last week, right? We trade over here. We take a play at the previous week's high. Where's the expectation? That 75,642 and a half, which was a little bit under that 76 level that we were monitoring last week. But an all-time high in a week like this week has the potential to be a little bit larger than what we've seen in the past. And if the UT1 is breached, we take a play at the 79,000. The vol market is not pricing that in, right? How do we know that? Let's spend the last bit of the session talking about some straddles. And then we will close it up and go through some questions. But let's go into the no 15s, right? Just to give it some time on these. Currently, we're trading 70,000 flat, roughly. The NOV 15 futures are 7,280, 7,300 roughly, right? So basically, the at the money straddle is a 70 strike, right? Where is the vol market pricing in the potential for range, right? 3163. Oops, sorry, let's do the offer here. 3233.5 plus 344. And when I say vol market, what do I mean, right? I'm looking at the at the money straddle. Why am I looking at the at the money straddle? That is, if you were to buy the at the money straddle, you are basically at this moment slightly exposed to direction, but more you're exposed to volatility, right? You don't care what direction the market moves. You just want the market to move outside of this already priced in 6,677 and a half option premium, right? If it moves 7,000, you know that the intrinsic value, which is those contracts at expiration, will be worth 7,000, right? just based on how options are priced. We will go into kind of the fundamentals of options, how those are priced. If you have any questions, make sure to do it in the Discord because we do not have time to do it today. But if you do have questions, I will be there and I can answer the questions for you. But 66,775, let's divide it by the at the money price, right? Which is basically the 70.30 from where we priced it. That's a 9.5% move in the next 10 days in markets. That is what the vol market's expecting, right? A move over this UP, testing the UT1, right, would be in alignment with what the vol market's expecting, right? Basically 9% up or down from this weekly CR plus, but an expansion to the 80,000 in the next 10 days would be underpriced relative to the vol market currently, right? So that's also something to look at when we're looking at markets, right? So Bitcoin expectation from the at the money no 15 straddle is in the next 10 days of trade, there's going to be a 9.5% move up or down. If it's less than that, it's a benefit to sell vol. If it's more than that, it's a benefit to be a buyer of vol, right? Over this UT1, we know that those trades are likely offsides, which could create a fast movement here to that UT2, right? Where that 80,000 on the week would be that upper extreme to start, right? So a lot covered. It is going to be a very historic week. It's going to be a very interesting week, but we can open up for questions. So let me pull up here. Yeah, the Discord. Okay, awesome. Yeah. So if you guys have any questions, feel free to drop them in the Discord. If you are watching on YouTube, I will be in the Discord answering questions every day when I can step off the desk. But yeah, interesting fact about crypto and a political event. Yeah, absolutely. I mean, we have yet to see a discorrelation between crypto markets and risk assets broadly. There's been one time, there's been a couple times, right? This Silicon Valley Bank debacle, USDC peg debasement, we saw a large outsized move to the upside in Bitcoin and Ethereum, largely because if you are in USDC and that peg is falling apart, where are you naturally going to go if you do not have any off ramps, right? Off ramps were going to be in some of those primary banks that were servicing the industry. You're going to have to go back into Bitcoin. You're going to have to go back into Ethereum, right? And so that kept the bit alive during that period in time. However, largely, I know there's a narrative that continues to be circulated that that Bitcoin's just going to outperform when the S&P just goes down, and we just haven't seen that yet. There's been periods of time, however, to verify and validate the theory and the ideology, it just hasn't happened frequent enough. So absolutely, if there's going to be a large movement down in the S&P, the Nasdaq, risk assets broadly, do not be surprised if Bitcoin follows suit, Ethereum for that matter as well. So UT1, yeah, so Steven's asking, what does UT1 stand for? And UT2, yeah, so it is just your upside target. That's it, right? So there's 4 upside targets, 4 downside targets. To kind of expand it for you. Yeah. So you can see here, UT1, UT2, UT3, UT4, right? These are, UT4 would be a very, very, very large event type move. We've seen it actually in some of the larger time frame data, especially when it comes to crypto. But the expectation is not a trade to the UT4 this week. However, you can look at this as a ladder every upside target that we do hit and maintain, the expectation is we're going to go test the next step higher, right? So while the expectation is not for a trade to 94, it's possible, right? And it's always important to note. Yeah, so what's it based off of? It is our proprietary data, right? So this is 35 years of kind of refining and perfecting this data. It's both qualitative and quantitative, but yeah, its inception was born in the Chicago S&P pits in the late 80s and 90s. So, and it's still used to this day. So yeah, okay. What are they based off of? How do you decide on that level, price level? Yeah, absolutely. So there is tons of strategy around this. We've talked about kind of just the very simple nuances of the price map, right? So over the directional is positive, under the directional is negative. We've talked about UP breakout, DP breakout previously in previous sessions. I can spend some time in one of the streams. Let's do a stream this month talking about new strategy using the price map, right? And so how to look at that and then correlate it to Bookmap, both from a risk taking and a risk mitigation perspective. But yes, absolutely, all of these levels mean something, right? The critical range is the most important, the UP down to the DP, sorry, right here. If it's broken, the expectation is for a move to the UT1 or a DT1. The extreme levels of that critical range are notated here by this X. So positive, critical, extreme, yeah, critical range, extreme, negative, critical range, extreme. There's tons of meaning behind it. Yeah, is price map based on Bookmap's liquidity or something else? It's absolutely based on something else, right? So it's always interesting to see the alignment with both of them, and they oftentimes do align, right? And so basically, we're just looking at the facts of the market, and it is our proprietary data, right? So there is an underlying algorithm to it, but yeah, when it aligns with Bookmap, that's exactly what we're looking for, right? That validates a level even further than what our expectation is. I notated kind of earlier on in the session that markets like to gravitate towards liquidity, right? Because that liquidity that's resting in the book is known buyers and known sellers, so you can trade against it. Bigger players oftentimes like to move size when they have a known defined counterpart that they can lay off their risk on, right? So while we're looking at the open market here, it's also beneficial to understand where those other larger buyers and sellers are in the market, because oftentimes a larger player is not going to look at every single tick. They're going to look at a large range, right? Because they have a lot of size to move. And oftentimes they're not able to move the size that they want in a shorter period of time, right? Without impacting the markets. So while discretionarily daily trading, weekly trading, some of these shorter time trade or time frames, the larger institutions are actually moving size on a monthly basis, right, which is a large range, a quarterly basis, and then an annualized basis, right? And so they may come in with significant size that has the ability to impact the market over the next 10 days, right? And they have to run TWAP algos off the open just to get the liquidity that they need, right? Um, and do all these kind of advanced trading strategies just to find willing buyers or sellers to their book. So yeah, it's always important to look at the price map, but then it's also absolutely important to look at the levels in Bookmap to correlate them together. Yeah, yeah, exactly. So MicroStrategy Coinbase case study, how they entered a position over 6 months. Average transaction was for around 0.5 BTC. Right. Yeah. it becomes incredibly more complicated too when you're a large scale buyer and the market knows it. Um, which they're a publicly traded company, so the bond issuance in which they do, they have to approve them. And so when they approve them, the market obviously knows. And if the market knows that they did a $43 billion bond issuance and are coming to market to buy 43 billion in Bitcoin, then you can sell into that bid, right? And so anybody can step in front of them um, and do some of that, right? So yeah, all of that stuff is super interesting, and that's just one large player, right? So there's also pension funds, there's also hedge funds, there's also other institutions that are involved. There's the large ETFs, right? The spot ETFs that are involved in inflows, outflows, all those kind of things. So um, yeah, exactly. Likewise, when Germany was holding the Bitcoin, right? Who knows if it was Germany that was actually selling, but the fact that the market knew that it had to come to market, that was that's largely the most important thing. Perception in markets is usually more valuable than the actual transaction, right? So you see that oftentimes in the Federal Reserve, right? The Federal Reserve has to talk down the market, talk up the market, because if the market were to perceive on hyperinflation, that would basically be the end in the debasement of many things, right? So if the Fed comes out and they take a hard stance, um, then that is oftentimes a little bit more important on their perceived stance than their actual actions. Yeah, right. Yeah, so the player sold is on a centralized exchange versus auctioning off in a one lot. Yeah, they absolutely could have gotten liquidity in blocks. So the fact that they didn't do that or find an institutional counterpart, there are professional venues that will take and warehouse that risk. Um, so it always brings into the question, was it actually them clicking the button, right? So I don't know. Well, we can never know. So yeah, I mean, at the end of the day, we are traders, and that's our job, right? So we are supposed to speculate. And so the pure fact that the German government sees that amount of Bitcoin, us speculating on if they were going to sell, right? Let's say that the German government didn't sell, right? Well, even if they didn't and the market believed that they were, then that's the only thing that really matters, right? So that is the fun part of trading, right? There is always the here and the now, and then there is the kind of the poker game of things, right? The game theory, so the psychology. Let's. I see Dan's typing real quick. Let me hop back over here real quick to see. Yeah, yeah, and that could have been yeah. If they would have chosen Celsius, that could have been catastrophic 2 years ago. So, yeah, I mean, I do think largely institutions or traditional institutions are still behind the curve when it comes to the understanding of kind of everything that's out there. At the end of the day, a institution does have an investor. They also have a mandate, and part of their mandate oftentimes is to save client assets, right? And so a lot of the riskier kind of yields are not as attractive to larger institutions, right? If you say, okay, well, you can get a 25% yield, but the risk is Celsius goes bankrupt, well, they they oftentimes are not going to take that trade, right? Because I don't know, they can go out and they can get a safer yield for investors, right? So that's usually how they prioritize it. And that, I mean, obviously that spills up to governments. Um, similar kind of behavior from what we've seen. So, all right, well, that is, I mean, it's basically about an hour. It's a little bit less than an hour, but let's wrap it up. And it's going to be an incredibly busy next few days. So feel free to, one, join us in the Discord. That's going to be your quickest. We are in here. We're in the Bookmap Discord, which you can find in the YouTube description. But more specifically, we are in the DARMA Capital Trading server within that Discord channel. DARMA Capital channel within that server. I'll be in here chatting, talking about what we're seeing in Bookmap. Also, we do give out daily levels, right, to look at and to kind of trade around for daily risk and risk taking. So feel free to hop over there, ask questions. If you have any questions on kind of options tactics as well, we'll spend some time. We've spent some time in the past going over some applications, right? Some strategies, but absolutely we can always revisit as many strategies as we need to. I am around and love chatting markets. So if you are not in the Discord and you want to reach out in a different fashion, feel free to visit us at dharmacapital.trade. You can reach out to me personally at spencer@dharmacapital.trade as an email, or I am on Twitter at _RIEGLE. So enjoy the week, enjoy the election, enjoy the volatility likely over the next 6 days, right? Potentially even longer than that, right? But trade small, pick your levels, and make sure that you are aware when you're on the market, right? Because things are going to be moving faster than they normally are, and it's going to be an interesting week. So enjoy. I'll see you all next week.